And the Organization of the Petroleum Exporting Countries and its allies have announced a 411,000 barrels per day production increase for July 2025. The decision aims to manage supply dynamics and safeguard market share. OPEC Plus will implement a gradual and flexible production increase subject to market fluctuations. The production adjustment is part of a broader strategy to maintain market stability while adapting to evolving global demand. Temitope Kolade, Associate Director, Oil, Gas and Power at Andersen Nigeria, joins me now. It's a pleasure to have you in, Temitope.
Good morning, Jonah. Thanks for having me.
Good morning. So let's begin by having some sort of background into what has informed this decision by OPEC Plus to increase, production by 411,000 barrels per day.
Okay, thank you for that. Prior to now, there had been a decision by the OPEC to cut down production volumes by 2 million barrels per day. And what they then agreed to do, starting from sometimes March or April, was to begin to release part of those production back into the market. Again, because typically they want to consider what's happening with price. It's either you win by price or you win by volume, right? And of course, because they don't control the market altogether, there are other players in the market. And because others are now producing a lot and they're not, Kazakhstan, for instance, will say to you that they're not going to reduce their production volume. They want to increase the pumping of oil out there. So to just ensure that they remain competitive in the market, they say we're going to begin to release these production volumes into the market. So far, they've done about 62%. And so at the time they were taking this decision, plus this 411,000 barrels per day was going to be about 62% of the 2 million barrel cut that they agreed to do initially.
Right. I mean, so that's quite the context. They're trying to win in terms of volume if they can't win with prices. But then there are questions around, your upping supply. Demand has been dwindling. How do they plan to balance that and perhaps even mop up the oversupply?
Well, the interesting thing is that just on Monday, when, after the weekend that they took that decision, oil price actually spiked a bit at about 2.5 by about $2.50. Right. So again, it's really looking at what are the fundamentals that are driving this sort of change. Apparently, because we're moving into summer and there's going to be a lot more travels, it's very likely that refineries will be taking in more crude for production. Again, over the weekend, I think there was a strike by some, again, because of this Ukraine-Russia battles that have not just ended just yet. There was a strike that was launched by Ukraine on the oil fields or the airfields of Russia, and that again spiked the price. That contributed to this sort of price. So typically, we'll watch out for all of these geopolitical tensions here and there and how they impact on the price of oil. The other side of things is to also look at what's happening in China. China, for instance, you may not have a clear insight into what's happening with respect to their inventory level. They take a lot from the rest of the world in terms of production, and they've not been taking so much, which is why the prices have also been moderated. And so the expectation is that maybe now they might be taking some more. So by that, you would think that if you produce more and there are activities going on here and there that demand these, ultimately the prices would moderate and they will be better.
There's a lot to factor in there with this decision. And as you have pointed out, oil prices did spike, towards the beginning of this move. But what effects do you think that this is going to have on Nigeria's economy? We know that oil has been our mainstay for quite a while. So what's the impact on Nigeria's economy, particularly in terms of foreign exchange earnings and the value of the naira?
Well, like you would agree with me, this is our mainstay, and you said that already. Budgeted, in terms of a target price was about $78 per barrel. We're now doing about $65 per barrel. Before now, it had slowed down to about 58, sub $60 per barrel. And what that means for us is that how do we defend the naira the way the CBN has been trying to do if there is no reserve? We might just struggle a bit and continue to depend on some sort of loans from outside Nigeria, from the IMF and all of those, and that doesn't help our fiscal position as a country. So a lot of implications for us there. If you also look at it from the refining side of things, it also means that because we still depend largely on having to import some part of our refined products, we're going to have to struggle because we are also contending to get as much foreign exchange to do those importations. So it's more or less a double whammy for Nigeria. We can only hope that we would have a productive economy so that we would be out of the woods altogether. But that's more or less a medium-term to long-term project. What can be done in the midterm would be to say, in the short term would be to say, can we ensure that at least the refineries that we have and we've been promised starts getting to work, and that way we are able to get some wins from controlling our production, and of course the crude that we produce also works for us at a better price.
I guess we're counting on Dangote to meet the local demand here with oil. But you did hint at potential naira volatility if this continues. Am I right?
Yeah. So again, like I mentioned earlier, the monetary policy from the CBN lately has been that would ensure that we have a lot of foreign currency or foreign exchange earnings pumped into the market, and we get a lot of that from oil. Yes, we have the non-oil, exports that also give us some sort of some win in that regards, but that's not contributing as much as we need. Right. And what that means is that if the CBN doesn't have enough to meet the demand for foreign exchange locally, we would have to look for every means to support our importation. Again, because we are import-driven, we are an import-driven economy. So that's going to make the naira weaker, apparently. But hopefully, what we've seen in the recent past is that the CBN has also been trying to ensure that there is a lot of portfolio investment coming in to help to address these issues, the sale of bonds and all of those, helping to address that issue. But the question is how sustainable that is and where that puts us in terms of the fiscal deficits that we have altogether as a country.
Yes, you're meeting immediate needs, but the long-term consequences will still have to face those. And let's hope they don't run out of ammunition to, fight and defend this naira. But you have highlighted as well the rationale behind this decision from OPEC Plus, and what is in store for them, right? But what about the potential risks, right? Aside the benefits that you highlighted, are there any risks involved in this decision to increase production, and how might this also impact the global energy markets?
Oh, thank you for that. Apparently, there are consequences. And I think that OPEC is ready for that. It's a question of, yes, like I mentioned earlier, it's either we win by price or win by volume, right? So really, it's down to individual participating countries in the long run. But generally, what might happen, what might result from this sort of increase in production is that, yes, we're going to have an oversupply situation where we'll then begin to worry about how much a barrel of crude is worth across the world. And I think that the United States of America, led by President Trump, is ready for this. They're ready to crash the price as much as possible. For an economy like ours that we have, the cost of producing a barrel that could be as much as $48, it means that the margin gets very low, and then the incentive for investing in this sort of enterprise within the country becomes very bleak, right? People will not see the need to continue to patronize the market, whereas we have countries where you can do as low as maybe $24 per barrel, and Saudi Arabia, for instance, is doing like $9 per barrel in terms of the cost of production. So it's really down to the countries that are oil dependent, right? And how they are able to ensure that there is the reduction in terms of the cost of production of oil, because when the price comes down and you have so much volume to push out there, how do you take care of your fiscal position? OPEC as a nation would say, well, I mean, as a body would say, we want our members to produce as much as possible and maximize the revenue that it can take. And of course, if you don't get it by way of price, you can get it if you have so much more volume. But how much does it cost you to really produce that volume that you need? It becomes unprofitable for us in Nigeria, and maybe less profitable for those operators that can still do some good costs in terms of production costs.
I mean, there's a lot that we know that this administration, they have come up with the latest incentive for production cost reduction. So perhaps we'll touch on that after this break. Stay with us. You're still watching Business Edge here on New Central. I am Joanna, and of course we have been talking OPEC Plus's decision to increase output. With me now, of course, and with me has been Temitope Kolade, Associate Director, Oil and Gas and Power at Andersen Nigeria. Thank you for staying with us. Of course, let's pick up from where we left off, and that was the impact this will have on oil companies operating in Nigeria, this decision to up output. So again, just run through the impact this will have on these oil companies, and by extension as well, the impact this will have on our fiscal situation here in Nigeria.
Yeah, thank you very much. Again, the point here is that we're going to produce more. That's what OPEC is saying. President Trump is also saying that I want to make production very easy for my people in the US, and so I want to push as much as possible crude into the market. Russia wants to sell more, Kazakhstan wants to produce more, and how much more are we able to produce in Nigeria in particular? For quite a while, I would say we've been saying that we want to do 2.1 million barrels per day. It's looking more like a mirage, right? Because we have systemic issues that are underpinning that sort of ambition, so to speak. Even though we had done something close to that or even more than that back in the days, but it's been very difficult doing that. So how do we now get there? President Tinubu said, I'm going to give you an executive order on cost efficiency incentive. And that's one thing that he has given to Nigerians. And he says to you that, I know you have an actual operating cost now, but there could be a target operating cost that will be determined, worked on by the NUPRC. And once that is released, we'll find a difference between the target and the actual, and then that will be your cost savings. And you could get a percentage of that cost savings as tax credit. And so over 3 years up until 2035, you could continue to get those savings recouped as tax credit for you. And that should encourage some operators within the system to ensure that the cost of production is reduced. And if that's reduced, it means that maybe indeed we can produce a lot more. And of course, it would also make sense to push more to the market as Nigeria. But how are we able to do that? With all of the systemic issues not being addressed, if you think about the fact that there are security issues, there are issues that could be addressed by technology, but we've been looking away from that for quite a while. So the issues are still there.
Right.
More importantly for me is that when you then see the cost efficiency incentive, it says you can't get more than 20% in a year. So does it really drive an operator enough to say that I want this cost savings, or would they rather find those savings in some other ways, whichever?
I guess we're going to have to wait and find out and see, how this incentivizes them. Finally, OPEC Plus, this decision that they have made to up supply, what are some of the key factors that they will need to monitor and respond to in order to ensure the success of its production increase strategy? And how do you think these factors could impact, the global energy market as we wrap things up?
Okay, yeah, I think the comment that you made, as a final note, helps to address this, because in the long run, OPEC is not just by itself. There are other producers that they need to concern themselves about and their activities, right? There has to be something that they are looking at in terms of what really favors all of the producers. Yes, they want to win by volume, but how much of that can you do if there are other players? Do you have to negotiate with OPEC producers as well to ensure that we know what the demand drivers are. If they don't know what the issues are in terms of those who would demand things and what production is going to be like, what activities are going to look like, then we would have an oversupply, and in a situation, production by member countries would become worthless, right? So like Nigeria, for instance, and that's why it's important for everyone within that block to come together and say, let's think about it. Where is our production going? And more importantly, where is the demand locally? Because for the most part, OPEC seems to focus on exports, the export market. And you would see that sometimes not so much is happening with respect to export in terms of changes in how much people demand from outside of your country. So what happens with the local use of those crude as well? So these are some of the things that OPEC needs to pay very close attention to and ensure that, yes, we want to ensure that our members produce more, but there has to be some price floor, more or less, to say that we won't want our prices to go below this. At what level it becomes unproductive or, non-commercial for any business to continue to produce oil.
All right, Temitope Kolade, Associate Director, Oil, Gas and Power, Andersen Nigeria. Thank you so much for your time and the insights.